British economic recovery does seem to be going much better than most economists were expecting. Over the past 24 hours, the UK has announced GDP figures that indicates that 0.8% economic growth has occurred in the third quarter of this year. This follows up from 1.2% growth in the second quarter, and both of these figures were much better than most economists were predicting. This has meant that the credit rating agencies are feeling a little bit more comfortable about the outlook for the UK economy, and that it also indicates that both the government and the central bank won't be feeling quite as much pressure as before to stimulate their economy. Despite this positive news, global share markets have been fairly soft over the past 24 hours, and this has seen the US dollar back in favour. The Kiwi has dropped against the US and is currently trading at 74.70 against the US and 47.40 against the Great British Pound. New Zealand currency and interest rate markets will be fairly stable, looking forward to the Thursday morning announcement of the official cash rate by the Reserve Bank of New Zealand. We aren't expecting to see major increases or decreases for the currency and markets following the announcement, as the market as well as ASB forecasts that there won't be any change to the official cash rate. We aren't picking an increase until March of 2011. Some of the factors that are influencing the decision by the Reserve Bank include inflationary pressures, which are looking fairly mild for the interim, economic growth, which is also looking fairly soft over the next 12 months, and unemployment, which is currently sitting at 6.8% and likely to stay in the mid-sixes for the time being. For these reasons, the New Zealand economy needs further stimulus from the official cash rate, and for this reason, we aren't expecting to see any increases until the early part of next year. This also indicates that we are likely to stay in a fairly low interest rate environment for the time being, but expect to see some increases down the track. New Zealand mutton and lamb schedule prices remain high, and this is not typical for this time of year when they are usually in decline mode. Mutton has been filling a global shortage of supply and has also offered a slightly cheaper alternative to some of the higher priced meat protein products. Exports of mutton from New Zealand are currently up 35% on last year levels, and it does look like global supply issues will remain in the interim. This also indicates that international prices should remain strong for the time being. However, the high levels of the New Zealand dollar against the pound will limit the returns that will come back to farmers back here in New Zealand. While we are expecting to see some declines in schedule prices through the season, we also expect to see schedule prices to average at or slightly higher than last year levels.